Warning: these social media platforms may be hazardous to your health. Censorship kills. Pain coming. This has been a PSA by Breaking Spectre. Well, good morning, everybody. How we doing? Today is the 9th day of December. Hopefully you guys are doing well. We're getting down to the nitty-gritty here towards year's end. Only got a couple weeks left until Christmas here. Hopefully you guys are getting your shopping wrapped up and all that good stuff. A little chilly in this part of the country here this morning, but definitely a little bit warmer than it's been the last couple days, or at least in the 30s here. But a lot of ground to cover here this morning on the broadcast. We're going to get into the oil market rundown. We'll talk a little bit about U.S. shale. Talk about what happened 40 years ago at the old Federal Reserve. Talk a little bit about our truckers and trailers, things of that nature. And of course, some emergency maple syrup issues up in Canada. Who knew? And gentrification of Austin and a number of other things here this morning. So stick around. We'll be right back. Hey everybody, Spectre here. Just wanted to give a big thank you to all you guys who continue to support my work. Jump in, day out on the streams, support all the various pieces I put out, etc., etc. And in doing so, I figured what the heck, we'll put some merch out there if you guys wish to continue to support and help defray some of the costs of streaming, which many of you guys know many of us incur. Got a handful of shirts and that here. Spectre Does News. We got the Realize, Real Lies shirt and that you hear on my PSA periodically. And of course the No BS insignia from the show I do over on the 5x5 channel, all of which you can get for the low price of $19.99. Aside from that, you can get the Let's Go Brandon hashtag FJB shirt as well in a variety of colors. And I've recently added the hoodies in a variety of colors you can get right there as well. And last but not least, you can grab yourself a No BS shirt and the Zip Up hoodie as well. If you don't want any articles of clothing, well, you can grab yourself a mug or a 20-ounce water tumbler if you wish. Your choice. And of course, as always, just want to thank you, the listeners, the audience, those who are in chat day in, day out. Thank you for your continued support. All right into it we go here this morning. Weather-wise, we're not looking too bad. We got a little disturbances and that going on up in the northwest, and it looks like we may have some spotty showers and things cruising across California, Nevada, Utah, Colorado area. Maybe that's rain, maybe that's snow, who knows. But in the upper Midwest here, Minnesota, Wisconsin, Michigan, Illinois area, we got some stuff cruising through here as well. Otherwise, the rest of the country looks fairly decent so far on the day. Temperature-wise, looks like, yeah, we're still a little cold. Got a little dip going on here through the Ohio River Valley, and perhaps maybe we'll see some of this garbage and that cruise through the teen weather here in the next couple days. But otherwise, I'm waiting for this little pocket to kind of cruise through where I'm at here and hopefully get a little bit warmer weather. All right, so aside from that on the morning here, let's get into it. It says futures drift lower in illiquid session as virus fears resurface. So after 3 days of torrid gains, U.S. futures and European markets fell as concerns about economic risks from restrictions to control the new variant outweighed optimism about the efficacy of vaccines after a study from Japan found that the Omicron variant is 4.2 times more transmissible. Look out, everybody. As largely expected in its early stage than the Delta variant. Says both S&P 500 and NASDAQ futures dropped around negative 0.4% as traders awaited earnings from Broadcom, Oracle, and Costco after the market close and tomorrow's key CPI print, while European equities drifted lower in quiet trade with little fresh news flow to drive price action. And here we see the E-mini S&P futures as it is here this morning. Uncertainty about monetary policy could keep stocks significantly volatile, according to Pierre Verret, a technical analyst at Active Trades in London. Investors are likely to remain cautious and keep on monitoring the macro outlook, especially today's U.S. initial jobless claims, in order to gather more clues on what and when could be the Fed's next move. Says in Asia, China Evergrande Group and Kaisa Group Holdings officially defaulted on their dollar debt, while the People's Bank of China raised its foreign currency reserve requirement ratio for a second time this year after the yuan climbed to the highest since 2018. And there we see that depicted graphically there. Says, let's see, some of the movers in Europe here today. LPP shares rose as much as 12% after its third quarter earnings beat expectations. The figures confirm a rebound of sales in traditional stores and stronger margins, according to analysts. Unicredit shares gained as much as 8.4%, the most since November 2020, after the Italian lender unveiled its new strategic plan that includes the distribution of at least 16 billion euros to shareholders by 2024. Société Marseillais du Tunnel Prado Carénage shares rise as much as 5.5% after Vinci Concessions and IFIG said that they reached a pact to act in concert for a tender offer at 27 euros a share. Zur Rose drops as much as 7.3% in Zurich after an offering of 650,000 shares, priced at 290 apiece, representing a 12% discount to the last close. Nestle Oij shares slid as much as 5.7% as investors digested the unexpected resignation of Chief Executive Officer Peter Vanacker from the helm of the world's biggest maker of renewable diesel. First Group shares fall as much as 5.9% after first half results, with Chairman David Martin saying the UK's work from home edict will clearly have an impact on commuter trips. There are potential downside risks to estimates in the short term if COVID restrictions tighten, according to Liberum, which is at a buy. Dr. Martin's released solid first half results, but there's nothing material to flag and unlikely to be upgraded to full year EBITDA estimates, Morgan Stanley says in a note. Shares drop as much as 5.2% after initially gaining 8.9%. And Electricité de France shares fall as much as 5.1% after Le Figaro said the French government is considering taking additional steps to keep electricity prices from rising too much amid a spike in energy costs. And of course, we'll have to see how that plays out, as we've seen a number of those things play out in Europe here as of late. And flashing forward into the market snapshot here today, S&P 500 futures are down 0.2% to 46.91 even. Stocks Europe 600 up 0.2% to 478.52. Nikkei down 0.5% to 28.725 and change. Shanghai Composite up 1% to 36.73 and change. Brent futures down 0.3%, 75.58 a barrel. Gold spot is up 0 to 1783 and change per ounce. US dollar index up 0.2% to 96.09, and the euro is down 0.2% to 1.1318. Some news out of Bloomberg overnight. European Central Bank governors are to discuss a temporary increase in the asset purchase program, with limits on the size and time of the commitment of a December 16th meeting, Reuters reports, citing 6 people familiar with the matter. Hungary raised interest rates for a 5th time in less than a month as policymakers try to rein in the fastest inflation in 14 years. The central bank hiked the one-week deposit rate by 20 basis points on Thursday to 3.3%, broadly matching the median estimate in a Bloomberg survey. China's central bank has signaled a limit to its tolerance for the yuan's recent advance by setting its reference rate at a weaker than expected level. China Evergrande Group and Kaisa Group holdings were downgraded to restricted default by Fitch Ratings, which cited missed dollar bond interest payments in Evergrande's case and failure to repay a $400 million bond in Kaisa's. Evergrande Group's inability to meet its obligations will be dealt with in a market-oriented way, the head of the nation's central bank said. The People's Bank of China is exploring interlinking the ICYMI, as the digital yuan is known, system into the faster payment system in Hong Kong, says Mu Chengchen, head of the Chinese Central Bank's Digital Currency Institute. Money managers have shown some tentative signs that they may be willing to start buying more Chinese dollar bonds again after demand for the securities plunged to a 27-month low in November. Greece plans to early repay the total amount of IMF's bailout loan to the country in the first quarter of 2022, Finance Minister Christos Stakouros said in a Parapolitica radio interview. The Omicron variant of COVID 19 is 4.2 times more transmissible in its early stage than Delta, according to a study by a Japanese scientist who advises the country's health ministry, a finding likely to confirm fears about the new strain's contagiousness. And Pfizer will have data telling how well its vaccine prevents infections with the Omicron variant before the end of the new year. Well, thank you for that, Pfizer. And out of news squawk, back in Asia, Evergrande declared in default as massive restructuring looms. China dollar junk bonds up after Fitch move on Kaisa and Evergrande. Gold steady as traders assess virus risk before inflation data. And China's credit growth rebounds after slowing for almost a year. Back over to Europe, says Rolls-Royce sinks as Omicron clouds outlook for 2022 comeback. Harbor Energy plans dividend, but pushes back toll mount again. Toxic UK Tory press says flashing warning signs for Boris Johnson. And Credit Suisse chairman Horta Osorio broke quarantine rules. Shocker there, right? Says U.S. event calendar for today, pretty skinny on the day, 8:30 a.m. We got December initial jobless claims, estimate of 220. Prior was a 222. Continuing claims, estimate of 1.91 million versus a 1.96 million. 9:45 a.m. today, we got December Langer consumer comfort. Prior was a 51 even. 10 a.m. October wholesale inventories, month over month estimate of 2.2 versus a prior the same. Wholesale trade sales, month over month estimate of 1% versus a 1.1%. And at noon, third quarter U.S. household change in net worth, prior was $5.85 trillion. So, quick rundown on the market here this morning. Aside from that, top U.S. shale CEO worried years of underinvestment could boost oil over $100. Well, it hasn't been all that long ago. We saw that Goldman Sachs was predicting that they were going to be at $90 a barrel here, and that quickly got whacked because of Omicron. Snatched right out of the claws of victory. Says after half a decade of U.S. oil drillers underinvesting in projects and returning money to shareholders, it could take years to resume pre-pandemic production levels that could further roil oil markets for years to come. Says I'm worried that it may get too high, above $100 a barrel, according to Scott Sheffield, CEO of Shale Explorer Pioneer Natural Resources Company, who is speaking to Reuters in an interview at the Petroleum Congress in Houston on Tuesday. Says I hope it stabilizes between an $80 to $100 range over the next several years. We need stability in the oil markets, he said. Sheffield said U.S. oil production would only increase by 3% annually because oil companies return cash to shareholders rather than boost capex. In that case, he added oil prices would continue to bid more than $70 a barrel for the foreseeable future. And here we see where West Texas Intermediate futures have gone here as of late, and it appears that they're back on the rise. He was mind-boggled last month when the Biden administration requested OPEC to increase crude output to suppress prices, overlooking U.S. oil and gas companies. The Biden admin called up OPEC to increase production and didn't ask the U.S. to do it, he said. Sheffield's outlook differs drastically from the Biden admin, desperately trying to squash oil prices amid plunging oil poll numbers due to high inflation ahead of the midterms. And of course, here we see the ever-falling job approval rating of Biden, which currently apparently stands at 42.9. I suspect that number is probably about 10 points off and is probably much lower, but that's just me. President Biden has managed to coordinate a global SPR release of crude. He's also requested OPEC to increase production. OPEC and its allies announced last month that it boosted crude oil production by 500,000 barrels a day in November. However, West Texas Intermediate remains above the $72 level. Further, the new Omicron variant of the coronavirus is turning out to be a nothing burger at the moment. Remember that point right there. It's a nothing burger. Why is the media hyping this up? It's not just Sheffield. Kyle Bass explains that higher prices are coming and blames 7 years of dramatic underinvestment in hydrocarbons will inevitably generate $100 plus crude oil and $5 plus prices at the pump for years to come. And so there's Kyle Bass and his tweet. Get ready for explosively higher oil. 7 years of dramatic underinvestment, all that we just talked about there. Says, who could have seen this coming? Well, us and Goldman for one. A Biden SPR release is now fully priced in and will send oil prices even higher in 2022 from a previous article. U.S. oil output is around 11.7 million barrels per day, below the 13 million produced pre-pandemic. Energy Information Administration on Tuesday forecast output will rise to 12.1 by the end of 2022. Years of underinvestment in the energy patch and the continued pressure to transition the economy to green energy will boost crude prices, thus continuing to unleash energy inflation that could be devastating for the Biden administration ahead of midterms as consumer sentiment slumps. And of course, if you've ever tracked anything to do with gas prices and various presidents over the years, you know that extremely high fuel prices tends not to favor too well for whoever the sitting president is, does it? Doesn't work out too well. So, aside from that, here, 40 years ago today, this was yesterday, an armed man stormed the Fed, furious about soaring inflation and high rates. Now, how many of you guys probably remember that scenario playing out? Well, let's go take a little trip down memory lane here. Says late in 1981 is best known as a time when the galloping inflation of the 1970s and early 1980s finally broke, with Volcker hiking rates to 20% and the 10-year yields rising briefly above 16%, a yield which would destroy the world today. It also marked the end of the 35-year-old Great Bond Bear Market of 1946 to 1981, and the start of the Great Moderation, which some 40 years later would push real rates to record lows of 7%, or down 7% rather. And while a few may remember it today, it was December 8th, 1981, some 40 years ago today, when an ominous event took place. Anybody recall that? Anyone? Any takers? No? All right, well, let's break this down. It says, as the New York Times reported, on December 8th, 1981, a man complaining about the high interest rates and inflation threatened to take members of the Federal Reserve Board hostage today, but was arrested without any shots being fired, a police spokesman said. The police said that the man, identified as Jim Von Brunn, went up to the second floor where he threatened a security guard with a .38 caliber pistol. Luckily, the man was disarmed without any shots being fired. There was a less happy ending many years later, when in 2009, long after he was released from jail, and then 88 years old, Von Brunn entered the Holocaust Memorial in D.C. and fatally shot a museum guard. Von Brunn died a few months later from natural causes while awaiting trial. But it says, back in December 1981, CPI was 10%. On Friday, it is expected to print at 6.8%, the highest since June of 1982. How long until soaring prices and near-record misery push more Americans to the edge of despair and, with nothing to lose, decide to pick up where Von Braun left some 40 years ago? Very good question. And of course, I am certainly not advocating what Von Braun did, but we definitely know who the purveyor of all of our issues are. It is the Federal Reserve, and the Fed, and the fiat currency system, and chances are a lot of these problems will poof, disappear, return to sound money. If you missed any of my pieces here as of late that I uploaded on that, I want to encourage you to go back on the channel and check those pieces out. Aside from that, what's tougher, finding drivers or trailers? Piece out of FreightWaves here. Says supply headwinds facing the trucking industry were front and center at an investor conference on Wednesday and Thursday, While executives said driver recruiting and broader supply chain bottlenecks are ever so slightly easing, the procurement of equipment has gotten tougher. Says I would predict at this juncture, and are looking out at the trailer OEMs and the tractor OEMs, that it could even be more difficult in 2022 on production and delivery than it was in 2021, said Mark Rourke, CEO and president of Schneider National, at the Stevens Annual Investment Conference held in Nashville, Tennessee. Says the lack of trailers are becoming the new driver shortage. Well, equipment purchasing for truckload carriers it will be well below normal replacement in 2021 given semiconductor and part shortages, as well as COVID-related labor issues that are plaguing the OEMs. Derek Leathers of Werner Enterprises, president and CEO, said current tractor and trailer order books extended well beyond the OEM's manufacturing capacity for all of next year, meaning the industry fleet, which has gotten older and smaller during the pandemic, won't be increasing anytime soon. I think you see continued contraction, or at best case, stabilization in 22, but with an older fleet, Leathers said. Werner's average truck age was 1.8 years heading into the scamdemic, with trailers 4 years old on average. While a recent acquisition skewed average ages slightly higher, an ability to get all the replacement equipment wanted has really pushed those averages up to 2.1 years and 4.4 years, respectively. Leathers said Werner's wants to refresh equipment, but there's no line of sight to when that moment is. It's certainly not in 2022. The best case scenario is you may see some return to normalcy by third quarter 2022, and that's way too late to have any impact on the year in terms of additional capacity. So I think we have a structural cap that's different than anything we've seen historically. Eric Fuller, president and CEO at US Express, also pointed to the third quarter as the earliest date for relief. He said the OEMs are guiding to a few more months for tractors that should have already been delivered. A number of the OEMs are going back to some of their larger orders and reducing the amount of tractors they're actually going to be able to produce in 2022, Fuller said. I think the trailer situation is worse. In some cases, to get a significant order, we're being told it could be multiple years, 24 to 36 months. A trailer manufacturer, Wabash, said it would build only 50,000 dry van trailers next year compared to more than 57,000 in 2019. The company's backlog, which extends into 2023, has increased to more than $2.3 billion from $1.9 billion at the close of the third quarter. It's in the process of converting refrigerated manufacturing capacity to dry van production lines, but that won't be completed until early 2023. Management from J.B. Hunt said delays in equipment deliveries will result in holding on to trade-ins longer than originally anticipated, which will drive its cost of service higher. The increased maintenance expenses associated with running older equipment will be an incremental component of its customers' rate structure in 2022. Less than truckload carrier Yellow noted a lack of trailers throughout the supply chain as trailing equipment sits longer at shipping facilities that are dealing with issues recruiting and retaining workers. Yellow CEO Darren Hawkins said he's most concerned about being able to take delivery of the trailers Yellow has ordered for 2022. He said the company can postpone planned trailer retirements if needed, but noted that overall trailer utilization has become a material burden on operations. Says we do not have access to our own equipment as readily as what we've seen in the past, Hawkins said. And then, when you do get that equipment, it's in the wrong part of the country, and we're having to reposition it. Yellow would normally use the rails to reposition trailers, but given current network congestion, they have more freight than they can handle. I have not seen it ease. I actually feel the demand is expanding for our services, Hawkins added. So bottom line, out of all this, they go into talk a little bit about driver hiring issues have eased, kind of, and also searching for a cure. But bottom line, it doesn't appear that, one, the driver shortage is going to subside. And number two, a lot of these trailers are bottlenecked at various distribution facilities because, well, we have a shortage of folks not able to handle and probably offload the cargo from said trailers, and as mentioned here, they're in the wrong part of the country at the wrong time. So bottom line, it looks like it's going to be a while before all of this supply chain business sorts itself out. So be patient, I guess. Canada forced to tap its emergency maple syrup reserves. And I had a Rodney Dangerfield piece I had in mind here. It says, what was the piece in that he used to say? It's getting bad. It's getting real bad. You know how bad it's getting? Well, it must be getting real bad if Canada's having to tap into their maple syrup reserves. Who knew they even had maple syrup reserves, for that matter? Says, you've heard of the Strategic Petroleum Reserve, but have you heard of Canada's Emergency Strategic Maple Syrup Reserve? The country has been forced to tap into its emergency reserves, according to the BBC, amidst a historic global supply shortage. The Quebec Maple Syrup Producers, QMSP, which the BBC article actually refers to as the so-called OPEC of maple syrup, has released about 22 million kilograms of reserve syrup from its emergency larder, the report says. This amounts to about half the total it holds in reserve, and marks the first time in 3 years that the reserve has been used. Helen Normandin of QMSP told U.S. Public Radio, that's why the reserve is made, to never miss maple syrup, and we won't miss maple syrup. 83 million kilograms of maple syrup was produced worldwide, and 60 million kilograms came from Quebec in 2021, the report says. Maple sap is tapped directly from sugar maple trees and boiled to concentrate it into maple syrup. It continues. It's painstaking work and is highly dependent on the weather. Quebec produces about 33% of the world's maple syrup. So there's your little ditty on the day. Who knew that now you can go and tell your friends that, hey, do you know that Canada had maple syrup reserves? So, well, if for whatever reason you head to your local choke and puke and had to gobble down some pancakes or waffles, you won't be short of syrup. Who knew? Gentrification tsunami transforms Austin into least affordable U.S. city. Austin, Texas is one of the nation's fastest gentrifying cities as the rapid influx of affluent millennials pushes out low-income residents. Parts of Austin that were once lined with mobile home parks and industrial yards have become modern apartment buildings and trendy restaurants, according to the New York Times. The working poor of Austin, many of which reside in Black and Latino neighborhoods, find themselves in a rapidly changing city impacted by gentrification. Younger generations have been pouring into Austin over the last decade, supercharged in the last few years as large technology companies expand operations in the metro area. A decade ago, Austin was one of the most affordable places to live in the country, and a liberal oasis. Now it's become one of the least affordable areas. On average, 180 new people were moving to the city every day during the scamdemic, as housing inventory was historically low. This combination ignited home prices, hitting a record of $536,000 in October, up from about $441,250 a year ago. Prices are more than doubled since 2011. Soaring home prices, rising property taxes, and redevelopment projects have unleashed gentrification in more than 35 neighborhoods, and another 23 are at risk, according to a 2018 study by the University of Texas. Says we knew it was coming, said Francisco Nunez, who lived in a Cactus Rose mobile home park trailer for over 2 decades. He said the trailer park was sold to a developer to make way for new apartments that cost double as rent. This trend is happening all over the city and pushing the working poor further and further outside city limits. Working poor are not happy with gentrification. It says much of the gentrification has been due to an exodus of people from California and Northeast states, attracted by new jobs and the economic prosperity of a thriving city due to Apple, Amazon, IBM, AT&T, Tesla, and Samsung opening new campuses or expanding operations. The flurry of high-paying tech jobs in the city has unleashed inflationary forces on the metro area, boosting the cost of living from one of the cheapest in the U.S. to the most expensive in under a decade. Rob Gordon, a manager and real estate agent with the realty company J.B. Goodwin, said the city expanded by 160,000 people in the last decade. Gordon said that the neighborhood of Northwest Hills, about 20 minutes from downtown, saw a large buying wave this spring, with 18 of the 19 homes bought over the list price. He said one home was listed for $975,000 and sold for $1.395 million. For as liberal as Austin is, one would suspect an uproar from local politicians amid the gentrification crisis in the city. So, for all you folks down in Texas, maybe you guys are seeing this. Maybe it's not just limited to Austin. Perhaps maybe that's going on in Houston, San Antonio, Dallas, Fort Worth, many other cities as well. But interesting nonetheless. And yes, obviously, as we've talked about here on the broadcast many a times over, a lot of migration going on. We talked about this from Michael Snyder's Economic Collapse blog piece the other day, that we're going to probably see a lot more movement across the country from blue states to the freer states like Florida and Texas both. Not just companies, but people in general. So, frankly, I would expect we'll probably see more, not less, of this gentrification. So, aside from that, quick piece from Elon Musk here. Take it for what it's worth. And of course, we talked here briefly about it the other day that he was obviously wooing China. No, not good. But nonetheless, he had this as presented with little comment. Just listen.
Then, at a certain point, really what you're doing is capital allocation. So you're not, it's not money for personal expenditures. What you're doing is capital allocation. And it does not make sense to take
Oh, come on now.
the job of capital allocation away from people who have demonstrated great skill in capital allocation and give it to an entity that has demonstrated.
All right, I guess I'm going to have to break from it there. 43 seconds long, but nonetheless, what it says, government is simply the biggest corporation with the sole monopoly on violence, and where you have no recourse. He succinctly says that, says, so how much more money do you want to give to that entity? How much more money do you want to give to that entity? And he's probably exactly right. Just a quick and dirty piece and some words of wisdom, perhaps, out of old Elon Musk. All right, aside from that, on the morning here, initial jobless claims crashed to the lowest in 52 years. The number of Americans filing for jobless benefits for the first time tumbled last week to 184,000, considerably better than the 220,000 expected, lowest since September of 1969. And here we see the print of that here via the charts sitting, yep, right about there. I guess go all the way back to the late 60s since we've seen that level. It says in the total number of Americans on some form of government dole has fallen back below 2 million. And there we see that highlighted in the red box there for November of 20. And of course, we're down about 350,000 compared to last November, apparently. Says considering we have never seen a wider gap between job openings and the jobless, this should not be surprising. And here we see the U.S. job openings, number of unemployed, and that obviously on the up and up. But of course, we've seen so many jobs and that are wide open for folks. Question is why aren't they being filled? Says, still think we should be at ZERP and still be buying billions in bonds every month? And for those that don't know, ZERP is zero interest rates, and that the Fed has basically held our interest rates at for, God, it seems like eons now. But yeah, nonetheless, that's the jobs report here this morning, or jobless claims rather. So, aside from some financial news here this morning out of American Greatness, says union mandated school shutdowns are having major consequences. And it says recently, a report compiled by Mike Antonucci for the Defense of Freedom Institute confirmed that the teachers' unions had a heavy handed role in the COVID related shutdowns that consumed much of the country starting in March 2020. And the never let a good crisis go to waste unions were in prime form in the process. The California Teachers Association, for example, issued a bargaining advisory in May of 2020 in which it states when exercising a get for the give approach to bargaining concessions, locals should consider strengthening or implementing consultation procedures language in the CBA, the collective bargaining agreement. The union added, now is the time to secure contract language improvements that we have wanted for some time. So while the California Teachers Association was busy instructing its local teachers unions how to milk the shutdown, Antonucci notes that it was successful on a statewide basis by, quote, winning a ban on teacher layoffs, a substantial reduction in required infrastructural minutes, and the elimination of public accountability data collections for 2020, including those for academics, absenteeism, graduation and suspension rates, and college readiness, end quote. Says while most schools open full time across the country in the fall this year, many unions are now demanding mental health days, thus shuttering the schools once again. This time, the closures are of variable time spans and are, in part, due to kids acting out and often becoming violent. As Burbio, the invaluable school reopening tracker, notes, by November 22nd, there were 3,145 school closures for mental health out of a total 8,692 for the school year. Says districts are handling the time off in different ways. A proposal from the Portland Association of Teachers asks the school district to convert 1 day per week at district high schools to an asynchronous day where students would stay home and complete schoolwork but wouldn't have any in person classes. In Detroit, the district has mandated that Fridays this month are for online learning only. Many school districts nationwide decided to shut down for the entire week of Thanksgiving instead of the usual 2 day break. So, bizarrely, while school shutdowns have impaired kids' mental health, districts and unions are now trying to fix the problem by closing the schools yet again. Says at the same time that schools are embattled, there have been reports of teachers leaving the profession in droves. While, to be sure, some districts are now short-handed, there has been no exodus writ large. In a meticulously documented piece written for 538, Rebecca Klein asserts, according to the U.S. Bureau of Labor Statistics, fewer public education professionals quit their jobs between the months of April and August the past 2 years than did so during that same time immediately before the scamdemic. Says while the teachers are leaving the field in droves claim isn't true, many kids are most definitely not showing up. The National Bureau of Economic Research finds that kindergarten enrollment fell by 3 to 4% in districts that opted for all virtual instruction in the autumn of 2020. Elementary school enrollment is down about 1%, while middle and high school enrollment was mostly unchanged. All told, about 300,000 kids left the system and many are not returning. Here in California, student enrollment is down 160,000, about 3%. In Los Angeles, attendance is off by 27,000 students, or 6% of the total. That number could balloon in LA when a strict vaccine mandate for students 12 and older goes into effect after Christmas break in January. At this time, 44,000 students are not fully vaxxed, and needless to say, any easing of COVID mandates is a non starter for the United Teachers of Los Angeles. Other California districts are running into similar issues. Also, when the statewide vaccine mandate goes into effect in the 2022 to 2023 school year, there will be even more heading for the exits. In New York City, the Board of Education has not released any clear data about how many students have left the public school system, but reports indicate that the number could be as high as 180,000 pupils, or 18% of the city's 1 million students. While children will be getting an education somewhere, homeschooling and private school enrollments are both way up. There is no doubt that public schools are taking a hit. In New York, an 18% drop in students could lead to an 18% drop in teachers, which means an 18% drop in teacher union dues. So, the union mandated shutdowns could come back to bite the unions big time. A little Schadenfreude, anyone? So, there you have it. The unions and that, the ball busters that they are. Perhaps maybe they overstepped their bounds in trying to use this scamdemic to their advantage. And perhaps maybe the parents in that will eventually wise up and realize what is going on here and pull their kids from the system, as they probably should. And again, as the article highlights here, obviously with what's going on in California, well, if the kids got to come back and be jabbed, if you're 12 and above, how many people are going to bow to that? How many other states or cities around the country are also going to try and attempt to pull that sort of garbage? And hopefully the parents are wise enough to respond in kind. So aside from that, more on parenting. Out of Breakpoint here says parenting and the state red flags in Build Back Better. Piece yesterday says President Joe Biden's Build Back Better Act, passed by the U.S. House last month, is expected to be passed by the Senate before Christmas. Adding this big ticket social spending and climate bill to the trillions already passed in the name of COVID relief certainly won't thrill fiscal conservatives. Depending on which version passes, it would add about $360 billion to the federal deficit. The plan is being hailed as good for families since it would extend the enhanced child tax credit by a year and provide assistance for childcare. However, as the saying goes, it's important to read the fine print, especially the parts about childcare. As Tim Carney writes at the Washington Examiner, the bill will likely include a large new daycare entitlement and universal pre-K program, but neither apply to family members or homeschooling parents. Aha, what did we just get done saying here? In other words, the admin only wants it to be easier for families to get childcare if it's from the professionals. Mom and dads, grandmas, aunts, and neighborhood co-ops need not apply. And as Carney points out, many parents, particularly those in households where both have to work, would prefer an opportunity for one parent to stop working or work less. A long-term tax credit could help many achieve that, but not a one-size-fits-all daycare subsidy which, as he put it, seems designed to change parents' minds about who should raise their children. Where have we heard that before? Says, of course, there's a debate to be had about whether or not the government should be spending taxpayer money to incentivize families at all. But, in this case, how it is proposing to spend the money reveals even more. Again, here's Carney. The question is this. If you wanted to spend money to help parents and children, and you were already willing to just hand cash to parents in the form of tax credits or a child allowance, then why would you specifically subsidize daycare instead of giving parents money and let them decide how to use it? Simply put, the state is not willing to give parents the choice. Let me read that again. Simply put, the state is not willing to give parents the choice. Kind of like whether or not you have a choice to be jabbed or not, right? Is that not your body, your choice? Or, thus saith the government, thou shalt from on high. Carney's reading of the bill is fair, especially in light of the resident's own words. Last month, the resident tweeted, nearly 2 million women in our country have been locked out of the workforce because they have to care for a child or an elderly relative at home. The Build Back Better Act will make caregiving accessible and affordable and help women get back to work. Haven't we heard that diatribe before? Kind of like the Affordable Care Act that wasn't? Of course, plenty of women do feel stuck at home and would prefer to return to work, but plenty of moms and dads would choose to stay at home with their kids if they could afford it. In fact, a 2019 survey by Pew Research found that almost 20% of women think not working for pay at all is the ideal situation for mothers, and about half overall would prefer not to work full time. These women are not locked out of the workforce, as the administration put it. Rather, they'll be locked in by a plan that subsidizes only professional child care and not family care. This kind of state paternalism not only suggests that, ultimately, life is about building a satisfying career, participating in the economy, and making more money, it suggests that to prefer a family life reliant on a spouse's income is, to quote one progressive New York Times writer, retrograde thinking, and it serves a more insidious agenda item of cultural progressivism. The government knows better than a parent about what's best for children. Plus, this spending bill must be considered in light of other actions by the administration. Recently, we learned that Xavier Becerra, who heads the Department of Health and Human Services under the Biden admin, is looking for ways to keep faith based children's service programs out of foster care. That's despite the fact that, as U.S. Senator from Oklahoma James Lankford tweeted, this move almost certainly runs afoul the Supreme Court's decision in Fulton versus Philadelphia, in which justices ruled unanimously that the city could not discriminate against a Catholic adoption agency in placing children. Both cases, selective child care, subsidies, and keeping some out of foster care, reflect a belief that the state is the most important and competent sphere of society, and the one that should decide how all the others run. That's not how things were designed to work. God first and foremost entrusted the family, not the state, with raising the next generation. Our nation's long history of working with religious organizations to care for kids has resulted in services the state could never have provided without help. Any plan that's designed to build back better should recognize that parents and religious organizations are solutions, not problems to be solved. So there you have it, some of the ramifications of the Build Back Better plan. And yeah, well, we have to leave that to the quote unquote professionals, not you at home or grandma or your Aunt Nellie down the street. No, no. You have to go to somebody that the government approves because they know better. Right? Good old Uncle Sam. So, what would a day be if we didn't talk about all the Omicron craziness going on out there? Out of Insider Paper today says Omicron variant detected in wastewater in Houston, Texas, according to officials. Yep, that little Omicron, man, they must have figured out how to identify this thing from 6 ways to Sunday, I suppose. The Omicron variant of COVID 19 was discovered in wastewater in Houston, the largest city in the south central U.S. state of Texas, confirming the new strain's local spread, according to city officials on Tuesday. Anyone care to gander how they determined it was Omicron and not Delta or Alpha or Beta or any other variant? How'd they do that exactly? Anyone? According to multiple local media outlets, the city has discovered the Omicron variant in 8 of its 39 wastewater treatment plants. According to the Texas Department of State Health Services, a woman in her 40s living in Harris County, which encompasses much of Houston, was identified as Texas' first case of the Omicron COVID variant on Monday. According to local media, the woman was fully vaccinated and had no recent travel history. Ruh-roh. Isn't this where the narrative starts to fall apart? It says the first COVID Omicron variant case in Chicago was identified in someone who had contact with someone who had traveled to the city and tested positive for Omicron in another state, according to the Chicago Tribune on Tuesday. The person was fully vaccinated with a booster dose and is not hospitalized. Oh, hang on here. Wait a minute. I thought this was I thought this was now because of the unvaxxed. Is that not the case? Now we got 2 people spreading it because they're vaxxed? Hmm. The World Health Organization has classified Omicron as a variant of concern after it was first reported in South Africa on November 24th. So there you have it, folks. We have such great technology and everything else that we now have the ability to detect it in wastewater. Who knew? I want to see it in practice. Anyone? Any of you guys down in Texas want to head to Houston Health Department and show exactly how they identified it was the Omicron variant exactly? I'll wait for it. All right, so in other news here today out of National File, obviously we've got this sham trial going on with Maxwell here. A little ridiculous. Newly released photo shows Jeffrey Epstein and Ghislaine Maxwell relaxing at the Queen of England's royal cabin. And of course, if you've been paying attention to the trial here, you know that, Judge Nathan Allison Nathan, whatever, has certainly restricted certain things from being entered as evidence, and apparently this came through yesterday. So, the newly released photo that has reportedly been shown to jurors in the Ghislaine Maxwell trial showed deceased pedophile Jeffrey Epstein and Maxwell lounging on the front porch of a residence that has been identified as the Queen of England's royal retreat at Balmoral. The photo, which according to multiple UK outlets was presented to jurors on the 8th day of the Ghislaine Maxwell trial, shows a beaming Maxwell relaxing on the porch next to Epstein, resting her arm on his thigh. Says UK paper The Mirror reports that the photograph, which has not been seen before, appears to show the pair at the monarch's Scotland home, and it isn't known when the image was taken. But reports have claimed that Ms. Maxwell and Epstein were hosted at Balmoral by Prince Andrew in 1999. Seems he can't quite distance himself from all this deal, can he, old Prince Andrew? Says Prince Andrew's name has repeatedly surfaced in connection to various aspects of Epstein's legal woes, as well as other members of royal families from the UK and multiple other countries. Says as National File previously reported, left-wing social media platform Twitter moved to ban an account providing live updates on the Ghislaine Maxwell trial on Wednesday, claiming the account broke, quote, rules against platform manipulation and spam, end quote. In a post written to the Patriot One Substack, the Free Press Report wrote, I woke up this morning and the @Tracker Trial account on Twitter was suspended. All the other accounts that I have made in the past were also suspended. According to a screenshot provided in the Substack article, the @Tracker Trial account was suspended for allegedly breaking Twitter's rules against platform manipulation and spam. The @Tracker Trial account was the largest account on Twitter that specifically tracked the Ghislaine Maxwell and Jeffrey Epstein trial. Twitter, of course, did not provide an explanation as to how the posts and updates made by the account contributed to platform manipulation and spam. Zero Hedge reported later in the day that the account had been reinstated. However, I'm not really so sure and if that is indeed the same guy or not. But they did highlight the fact that he was over on Gab as well, and I think he was under @NancyTracker, if I'm not mistaken. And I'm not sure if that same guy also fired up another account on Gab as well. So, bottom line, I suppose the best way to find this guy, I think the account over on the Substack is Patriot One, if I'm not mistaken. Yeah, right there, patriot1.substack.com. Probably follow all of his reporting and that for the trial, because obviously the Mockingbird media, yeah, they couldn't care less. Which leads to the last story this morning. Alec Baldwin disappears after his name appears in Epstein's little black book of pedophiles. Seems the problems keep on mounting for Baldwin here. Says Alec Baldwin and his wife have deleted all of their social media accounts after Baldwin's name emerged in Jeffrey Epstein's little black book of VIP pedophiles. The Baldwins disappeared from public life on Sunday shortly after evidence emerged that he was listed in pedophile billionaire Epstein's book during the trial of his Ghislaine Maxwell Epstein child trafficking pimp to the elite. Many have since connected the action to Baldwin's killing of cinematographer Helena Hutchins on the set of his new movie Rust. While filming the movie, the loaded gun Baldwin was pointing at Hutchins discharged a live round, hitting both the director Joel Souza and Hutchins. Souza suffered an injury after being hit in the shoulder, but Hutchins died. IGR.com reports, however, the Rust shooting is far from the only controversy Baldwin has found himself in the middle of this past week. Says on Friday, a piece of evidence submitted in the United States versus Ghislaine Maxwell directly connected Baldwin to Jeffrey Epstein, the late financier accused of various sex crimes, including many involving underage girls. Maxwell obviously is currently on trial facing charges related to her alleged complicity in Epstein's crimes. The piece of evidence in question, Government Exhibit 52, was an annotated copy of Epstein's Little Black Book, a directory containing a long list of names, numbers, and addresses for Epstein's many friends, associates, and acquaintances. A long list of prominent celebrities was included in the book. Among them was Alec Baldwin. This was all revealed on Friday, a mere 2 days before Baldwin and his wife deleted their accounts. In addition to Baldwin, contact information for various other celebrity figures can be found within the Little Black Book, including Ralph Fiennes, David Blaine, Ivanka and Ivana Trump, Jimmy Buffett, Chris Evans, Dustin Hoffman, Mick Jagger, Michael Jackson, and Chris Tucker. A copy of that directory, with various entries redacted in order to protect the identities of potential underage victims of Epstein's, can be found and viewed here. Many affluent businesses are among the listed names as well. These include David Cook, Michael Bloomberg, Peter Cohen, Flavio Briatore, Steve Forbes, Robert Murdoch, Ronald Perelman, the businessman, not the actor, Peter Soros, the nephew of George Soros, and Robert Trump, the brother of Donald Trump. Says in addition, the names of politicians from countries across the world can be seen in the directory, including prominent world leaders. Those names include former President Donald Trump, former Democratic Senator Ted Kennedy, former Prime Minister of the United Kingdom Tony Blair, Prince Michael of Yugoslavia, and entries for the Duchess and Duke of York. In summary, the book showed the incredible influence and long list of personal connections Epstein had with global elites, among which was one Alec Baldwin. Timing is everything, right? So that's what I'll leave you with here this morning. That's going to wrap up the broadcast for today. I'll be back on later on today over on the Soapbox. Have no idea exactly what I'm going to cover. Have a little bit of an idea, but we'll have to see how that shakes out through the day here, if anything else rousing comes up. But otherwise, we'll be back here tomorrow morning, same time, same place. As always, appreciate you guys tuning in. All you folks over on the YouTube side, over on the DLive side here this morning, thanks for tuning in. And of course, folks, if you're not aware, now over on the Foxhole as well. If you are on the YouTube side, I would caution you that you should probably ensure that you have accounts over on DLive, Twitch, Foxhole, wherever, in case something should happen. As you well know, I've had a couple brief vacations here as of late, thanks to old Susie and company over there and their absolutely lovely algorithms. Appreciate it. So that's going to do it this morning. Appreciate you guys tuning in, and we'll see you back tomorrow. Take care. God bless everybody.